get to the point, your monthly market report from the Reno Sparks Association of Realtors. I'm Sherrie Cartinella, your 2011 president, along with past president Ken Amundson, and this is the February report. As we move into the new year, we expect the market to perform like a marathon. Remember Aesop's fable, The Tortoise and the Hare. The moral of the story was slow and steady finishes the race. We don't expect a quick sprint to the finish line, but a steady pace toward recovery and what we hope will be a balanced market. While no one in the economics world thinks we will be out of a market dominated by distressed home sellers anytime soon, first-time home buyers, investors, and those in search of their dream home have a wide selection of homes to choose from, terrific prices, and even though mortgage rates have bumped up 0.5%, affordability for homeowners and profitability for the investors is still great. We'll put mortgage rates into perspective later in the report. Ken, let's get to the point.
Thanks, Sherrie. In January, we experienced a typical cool down in sales. The total closed sales of single-family homes in the greater Reno-Sparks area were 350 homes sold during the month. Last year, buyers were adjusting to the news that first-time homebuyer tax credit program had just been extended for buyers with home purchases in escrow by April 30th. We're starting 2011 with a more normal winter cool down in sales without the artificial pressure of tax credit deadlines. January sales numbers set a new record. 350 sales make this month the second highest January sales month for single-family homes in the past decade. Since January 2008, we've seen a steady trend of increased year-over-year sales. It's worth noting that this near-record January 2011 sales number was accomplished without tax credit incentives. January's performance was similar to January 2010, with a jump in month supply of inventory. January's 8.8 months of inventory is up 2.5 months from December, but performed close to January 2010 numbers. This is largely due to an increase in new listings in January following a traditional December with fewer than normal new homes placed on the market. The median home price of $159,950 became the new single-family home price low and added a little settling to our 20-month lateral move since May of 2009. January's median home price was down $7,050 from January 2010, a decline of 4.2%. Comparing this January with the market performing on its own to last January's median sales price, which was influenced by the tax credit, it is encouraging as we see the mostly level trend continue. We anticipate that we will see this trend continue through the winter. Sherrie, tell us a little bit about the new listings.
New listings coming on the market in January came in at 701. The trending up of new listings begins in January of each year. This January is no exception. A look at the last 3 years shows almost identical summer hills and winter valleys in new inventory additions. Distressed new listings, short sales and bank-owned, moved back down to 71% of the mix in January, with notices of default remaining below the 600 level for the past 4 months. This may be a positive sign. The change came in the short sale segment of the mix at the expense of bank-owned and traditional equity sales. As we continue to work through the foreclosure and pre-foreclosure inventory, it's a given that distressed listings will continue to dominate the mix. Back to you, Ken.
In October, we saw signs of an increase in new pending sales in the short sale category. That trend has continued through January. With new short sale listings dominating 41% of the market and no incentivized deadline to close, buyers may be willing to gamble on a successful short sale transaction. Bank-owned and no special conditions remain steady. Let's take a look at Fernley. January single-family home sales dropped back to 27 units, a classic winter slowdown as the market performs more normally without the artificial stimulus of government homebuyer incentives. Looking at Fernley's sales history, it appears that the Fernley market was heavily impacted by the tax incentives. The January sales figure of 27 is identical to the January 2009 sales figure. Median home prices in Fernley declined in January over December and finished the year at $76,000. Like Reno's numbers, a new low.
Let's put it all together. Mortgage rates, although inching up as predicted, remain at a historical low. The increase this week from 4.5% on a 30-year fix to 5% should be an incentive to move buyers from thinking about buying and sitting on the fence to just doing it. The impact of an increase in interest rates is about $60 per month on a $200,000 mortgage. Current predictions are for the rates to continue to inch up this year. The size of the active inventory net of any pending sales, increased in January to 1,966 single-family homes available for sale in the greater Reno-Sparks area. Closed sales numbers in January set records as being the second highest January sales number in history. The mix of closed sales in January has shifted again with a 9 percentage point increase in the number of short sales over December to 39% at the expense of the no special conditions and bank-owned categories. The fact that so much of our inventory consists of homes for sale by distressed sellers is a short version summary of our market. The employment picture is the key to shutting off the supply of new distressed listings entering our market each month. Median home prices ended the year at a new low, down $7,050 from last January at 2000 to 2001 prices. Ken, tell us some things to watch out for.
Mortgage rates remain at historic lows, up a little from the all-time lows of earlier in 2010, but still outstanding. As predicted, rates are expected to slowly creep up in the coming months. For those with stable jobs and who expect to stay in their home long-term, it's an excellent time to buy. Savvy investors are seeing this as an opportune time to buy real estate, as evidenced by the high volume of year-end closings and the fact that investments in rental homes will pencil for the first time in many years. Consumer confidence and Nevada employment numbers are critical to our local market. These two go hand in hand. In a blinding flash of the obvious, people with jobs are much more confident than those without. The key indicators for the coming months are the new pending sales numbers keeping pace with the closed sales numbers to control inventory levels, and market absorption numbers returning to less than 7 months of inventory, indicating a more balanced market.
That's our To The Point report for February 2011. Talk to your local realtor for details for your neighborhood and join us again next month. Tune in next month for the latest To The Point.